You could have $100,000 in income, $50,000 in losses, and you're still going to pay taxes on the full $100,000. Does that make sense? Is how to deduct 100% of real estate losses by being a material participant. People who have passive income as well as active income, there are often passive losses that incur, especially in real estate, which is why it's so important a topic in that area industry. There are losses due to depreciation or whatever else the reasons for the losses are, that if it's passive, if it's only passive income, you will not be able to take any of the losses. Zero loss deduction. Passive income. Give me 1 second. Lunchtime. But before we get there, let's go over this really quickly. Passive, right? If it's purely passive, which means if somebody else is running the business for you and you're just getting passive income, right? That's great. You can deduct your operational losses, right? Anything that costs to run it. But if you have a paper loss, if you have a deduction, if you have even if it's a real operational loss, but it's a zero, but it's a negative, you're not going to be able to deduct that loss from your active income. Got it? So let's say you make $100,000 in your active income. You work a W-2 job, you get $100,000, and let's say you have a $10,000 loss on your real estate income, passive real estate income. You know what? You're going to be paying taxes on your $100,000. Doesn't matter that you had a $10,000 loss. Got it? Okay, now check this out. If you're active, if you're considered active, and there's criteria for each of these, right? Criteria, there's going to be a bunch of criteria. I'm not going to go into all the details of the criteria right here, right now, but it is just know that these are the terms you're going to be looking for, and these are the concepts you're going to be looking for. So active income. If you are active in your real estate, right, you can deduct up to $25,000 of your losses, of your passive losses. Got it? Up to $25,000 in passive losses. So again, it's the same scenario. $10,000 loss, but you're active, and $100,000 active income, W-2 income, you will only pay taxes on your $90,000, right? Okay, now, but however, if you have $100,000 in W-2 income and you have a $50,000 passive loss, you know what? You're going to be paying taxes on $75,000. Get it? Because you don't get to deduct the whole $50,000. Okay? Because you only get capped out at $25,000 when you're active. However, if you are a material participant, if you're a material participant in your real estate venture, you know how much you can deduct of your losses? 100% of your losses. So in that same scenario, not the first scenario, the $10,000 loss, but the second scenario, the $50,000 loss, you will pay taxes on how much? $50,000 only. Why? I got $100,000 W-2. I'm going to slow down a bit. $100,000 on the W-2. $50,000 loss makes what? $50,000 left. Even though it's real estate right now. So it was a bit of a misnomer when I said in the beginning that you can deduct 100% of passive losses, right? Because you're not considered passive anymore. You're considered a material participant. Right here, you're active. Here, you're material. So don't go writing down or telling anybody, oh, I'm deducting 100% of my passive losses. It's not passive losses. It's material. However, what the difference between passive and material, this last one right here is just real estate professional, right? So 100% also the real estate professional. But my question is the difference between a passive income, passive losses, and material participant. There's going to be about 7 criteria, and you have to only meet one of them. So it's going to be critical for you to know what those criteria are, and to know what the criteria is, and to make sure that you are a material participant. That's all. So I won't go into all the details but I'll just tell you one way to be material participant. Just one way to be a material participant is if you work 500 hours per year or more on that business, right? 500 hours. You know how much that is per week? Well, there are 50, how many hours? 50, how many weeks in a year? 56, 53, 52, I think. So that's about 10 hours per week. That's about an hour plus per day. Got it? It's possible, for sure. Hour per day to deduct 100% of your losses. You can do it. You can do it, right? material participant. That's it. So this episode on real estate losses, how to deduct 100% of real estate losses by being a material participant. Have a great day. This is Wander CPA.